Welcome to TradeTheMBI.com. This is Sean. This report is for the 15th of June, and we're halfway in there, and this has been a nice run for the summer. So, all those selling may and go away, they're missing out on the boat, and that's kind of what's driven some of this because you just can't ignore the fact that return is putting people behind, and this is something that we expected given what rates we're doing, that it would be inevitable that we would have to go there. We are seeing a little bit of a drop off in short term buyers here from a DOC standpoint, but science still under red. So again, we're just going to get that play back and forth. And we even kind of saw it today, made new highs, then some profit taking, and it gets bought back up, and the cycle repeats itself. From an NQ standpoint, that's been the leader throughout all of this, and from an MBI reading and that, you can see that we're catches up here. A little bit of internet delay there. From an MBI reading, we can see that the magenta over yellow, and we are seeing now a little bit increase in shorts from a NASDAQ standpoint, particularly on daily. That's relevant, but you're going to have to see it roll over before any of that has a strong enough effect. What it does, though, is it's that movement intraday that's going to give us a little bit more of a range, but this has all been under positive extremes, so we understand that when that comes, you have very specific targets of each of these lows from those positive extremes going all the way back to that breakout. We'll definitely get their fills. It's just a matter of waiting for when it's the appropriate time from a treasury standpoint, not going anywhere, kind of reach that comfort zone where there's a little uncertainty. It's not where we probably should be. Fair pricing should be right down towards that 100 or slightly lower, but you're going to get that allocation variation, and that has an impact. And the Fed, I think, is kind of toying a little bit with making adjustments to try and modify the market move versus where rates are, and just to keep things under control. From an oil standpoint, supply builds increasing, which is a little bit of a surprise. So again, that's something we talked about, whether it has to be increase in production versus a slowdown in anything. But I think still needed about another $10 or so less for it to be a positive from an economic standpoint, but this is enough to just maintain status quo, which I think from a Fed standpoint is ideal. Euro's been making its slow push back up towards that 50% mark right there. Now we got the MBI white lead on that, so that could be a ceiling for it at this particular stage. Nothing's changed from that standpoint in the Eurozone. And from a gold standpoint, again, without any of that impetus to drive things, slight decay, and not a surprise because we expected this from also cryptos to break down a little bit more. And I think we saw the beginnings of that here with Bitcoin breaking below, making a new low within there, and still MBI white leading. Just not a whole lot of impetus because what's the motivation? Markets accelerating far greater. If we saw some volatility in the market with the sell-off of that, then I think that you might get some more interest going back into there. And you can see ETH much more significant pullback. And all this goes back to just the completion of dips below the positive extreme here with the red below, where we have these magenta lines. And that creates too much button pushing there. All the way down to that 15 range would be the fill-in. So normal cycle, I think, from what we've been seeing. And when we look at the 50K, you can see that filled in all the way back to this set of positive extremes. That just leaves a little bit further from this initial breakout. That would be all the way down to the 43.68. I think that would have to happen though when we get some sort of sell signal or just some jawboning to kind of like tweak people. But this is a normal kind of fill back and pull back up. Intraday, we can see that we started out flat. We had the rise, came back, filled in that spacing, and a lot of MBI white spikes. And within a bullish period, sometimes people think that that's not going to fill, and it's like They still do, and that's the whole point of being able to see it. Then later in the day, when Fed comments and that came through, and that we ended up with that nice little clearing the stops, only to be bought right back up. And when you see it happen like that, it's pretty clear that that's what the intent is just to scare out weak hands. Here we are in post market and pretty flat, not a whole lot happening within that. We had the MBI white lead on that, which would probably take us right around that beginning of the 44 range. So all in all, I think we're getting that natural variation. And to me, it all looks rather healthy within a normal increase and gives plenty of options, both long and short. So kind of ideal from that standpoint. I think that there are no real problem areas at this particular stage. We're going to watch that NASDAQ with the MBI white and stuff, but um, until there's a little bit more of a consistent, I don't want to say sell-off, but just moderation, then we might start to see some softening in the readings that would justify a more prolonged or significant downturn. But until then, I think we're just going to get more of this natural back and forth, keep pushing new highs and sell back into it and go from there. Unless something significant happens, and obviously we'll all know about that if it takes place. So, good stuff. As always, though, I'll continue to update you on the Skype chat. Trade well.